Hello everyone. Today is just the weekly outlook for the week ahead, of course. So we're going to talk a little bit about the Europe CPI and how this will affect the Europe today. So for those who don't know, we do have the Europe CPI tonight. Well, tonight for me, but most likely in the morning for you guys. So that's going to be 7 p.m. here. So I'm assuming now it's like 6 to 8 a.m. where you guys at. So 7 p.m. now from Australia is around 3 hours. So that could be between 9 to 10 a.m. for everyone here in the call. But best to check the economic calendar, of course, on your time zone. And that gives you a much better actual time for what time it's going to be the release. Then we're going to have a look on Euro US dollar potential targets for the year end. The year is coming to an end. So as we all know, we literally just started September yesterday. So we only got 4 months. So 4 months ahead of us. And then that's the end of the year. I do believe we can have a good year end if, we just sort of take it easy and go with the flow in a sense. And then, of course, I'm going to talk with the DXY breaking lower. Will that actually happen, or how this will go? Okay, cool. That being said, all right, let me take this off and come back to this page. So the first thing is we're going to get the Europe CPI today. And I just want to bring to how it will affect the euro. Today may be a little bit quicker, the webinar, because I want to save time for, actually coming to Thursday on the NFP. So let's see how this NFP will go. But anyways, so coming back here, let's have a look on the Europe CPI and what are the expectations, and let's work our way from there. Okay, so on here, just take this out and go. I'm on FinLogic, so you guys can just type finlogics.com on Google, or simpler than that, you can just click onto the link I'm going to send on the chat, and you're going to be coming on this page. So you go into Tools and Economic Calendar. On here, you have a few options. It's a pretty tailored to yourself, the calendar. And that's pretty good because you can sort of do the way you want and look what you want to look. So for instance, if you click on this little Earth emoji here, you can see that I have all of the countries selected. But in essence, we're looking now for the euro area. So what I can do is I can just click on select all, and all of that will be unselected, and I can click on euro area only. And that's already the report right there. Sorry, the release right there. But that's for recent and next, or even basically today. If I go this week, and then I come here and I can change the impact to low, medium, and high. So if I only want to see the low, I just leave the low there. If I want to see the high only, if I want to see the high only, I just leave the high. If I want to see the median, I just leave the median. If I want to see median and high, I just leave median and high. But I want to see, for instance, everything, then just put everything, a tick box on everything, okay? Now, today is Tuesday, so wait a minute. I think that's wrong. Oh, there you go. Yeah, it's correct. I was looking at the time here, but the actually time is down here. So today is Tuesday, September 2nd, 2025. We're going to be looking at 7 p.m. in Australia. Remember, this is Australia time. If your calendar doesn't pick up your VPN or... Oh, sorry, guys. you can just come into right here on the top and you can pick your time zone. Okay. Now, my one is correct, so 7 p.m. Says Australia, Sydney, GMT plus 10. So if I go here, you can see that the forecast is at 2%. The previous was 2% as well. So in essence, we don't have much changes from the actual to now. From previously to now. So in my opinion, it will be interesting if we get something below that. And it's a pretty simple reason why I think that. We saw that the ECB, the European Central Bank, is looking to reduce the target rates into the inflation down to 1.8 into the 1.6, sorry, 1.6 into the longer into the medium term, and then at 1% into the longer term. So if we think about what would be the most positive outcome for that to happen, is this release come below 2%. Maybe it comes like a 1.9 or 1.8 or some numbers around that. And that would be the most positive scenario for the euro. Okay. So in my opinion, something that is going to be below the 2% will be positive. Something's going to be above, it's going to be negative. So right now the market is playing with the central bank. So if the central bank says that they're going to decrease the rates when the inflation decreases, then that's great. That's good. And we're probably going to see that happening pretty soon if the inflation gets down. So if the inflation comes, the release comes down, then that's great for the euro because we know what's going to happen. Now, if we look to the other side of the wheel, if the inflation comes higher than the 2%, what can possibly happen is that it's going to be such a uncertainty, such a big uncertainty, that most likely the euro would be weakening. So in this case, the good is good and the bad is bad. Literally it. Okay. A few months ago, we were playing the bad is bad, the bad is good, and the good is bad. I think we're back to good is good and bad is bad. Okay. At least for Europe, in my opinion. So when we go and look to chart, like EURUSD, for instance. So let's go for 1 hour time frame. So 1 hour time frame. This trade was taken on, what was the day? Oh, okay. So this first trade was taken on Wednesday, and this second trade was taken on Thursday last week. So there's a week already, and both of the trades are moving into profits. One of them is 908 points, so that's 90 pips in profit. And the other trade is moving at 60 pips in profit. So that is 150 pips in profit right here. Okay, so that's pretty great combining both of them. The first target, as I've mentioned previously, is the 1.17500, right? Around this level here, 1.17500. And then the main target would be at 1.20. Okay, that's the main target in my on my view. From there, I would have to see how the market would react. But my, now answering the question, euro potential targets for year end, my potential target for the year end is at 120. Okay. But for the looks like, what I can see right here is that we're having some sort of pullback on top of this consolidation. In the meantime, this is a consolidation right here, as we can see, and right now we are coming back down. So there's basically one option, in this scenario. Well, there's actually two options in this scenario. First option is that the release comes in higher than what was expected, and maybe we have a weaker euro, and then euro can probably come down back to maybe 1.16500, around those levels. And the other option is that if the inflation comes below the expectation, we may have a higher push and we can get the target reach very quick at 1.17500. Okay. So based on this and looking at this chart, the most simple scenario, and of course, the most simple and easiest, I would say, would be going above 1.17500, because we already have all of the market expecting the euro, the ECB to cut. So if they get that release a little bit lower, then that's a great scenario for them, and they can probably do a cut. Okay. Now, if we see the opposite, then I'm really interested to see how would that go. But maybe we can have a pushback on euro. Do you guys have any questions so far? I think it's pretty clear, right? I'm just trying to see if anyone have any questions. No. FTN Francis sent an emoji. That's a cool emoji. Hello. Okay, cool. So moving on. What are the potential targets for EURUSD by end of the year? As I say, 120, it's pretty clear. Now we have to do some breakdowns in a sense to be able to, look at it into a simple way. There's two ways to do that. As we know, we are in a consolidation. I'm bullish on euro, so I would like and expect the EURUSD to break above. So if I just, usually we can see that the consolidation it's basically, if it gets out of a consolidation, it goes to the same sort of size consolidation upwards. So based on that, we can just copy and paste the consolidation box. And put this in green. So that would be my second, I would say my second favorite target, because my main target is still 120. That would be just another potential target for the EURUSD at 1.18700. Okay. So 1.18700 would be where I would be looking to place some of the 50% of the take profit, and then leave the rest to 120, or even more, maybe 60, maybe 70%, or there's always bigger possibilities, if you know what I mean, in a sense. Okay. Cool. Let's see. Someone have a question. I seen yesterday the US dollar sold off down to 0.95. You mean the DXY? I'm not too sure about 95. 0.95. Well, the US dollar is trading at 97,900 now. So 95, there's a bit of a way to go. 95 would be like down here. So there's a lot of to go. But don't you mean like maybe a pair? Like a US dollar coupled with another pair or something? Just trying to understand, because that's a big difference. So if you can just tell me about that, that would be great. So we can I can answer your question. if you have any questions about that topic. Anyways, so moving ahead, the Jackson Hole speech was quite of a not so great for the DXY. I must have been on a different chart. Yes, maybe you were on a different chart because that's quite of a big difference. You know, we're talking about like over maybe over 5% of a difference, maybe 3% of a difference, because 95 is quite a fair price. Anyways, far price. So the Jackson Hole speech was quite of a really bad move for the US dollar. I think based on what we've heard about Jerome Powell, I've seen that he's very dovish. He's really very dovish, and he's willing to do cuts coming into September and December. If we do look at the CME Fed Watch 2, we do have an expectation of 89.8% of a chances of a 25 base points cut. Then on October, we have 50% chance of no cuts from September. And then in December, we have a 49.5% chance of a 25 base points cut from September. So basically right now, the expectations are between 50 basis point of a cut. Depending on how the NFP numbers will come on Friday, we may see this changing very quick. You know what I mean? Really quick. Okay. So coming from like, if the job numbers coming very low, again, like 50,000, the expectations is 70 something thousand, 78, 73,000. If the job numbers coming at like, I don't know, around like 50,000, 45,000, that's really bad. Then we may have a possibility of another 25 base points cut in the month of October, because there's not of a big difference between 44% to 50%. It's only like 4%. Sorry, it's only 5%. So I'm hoping they do cut actually 75 base point, because that would just strengthen my thesis of a weak US dollar. Now, we do need to wait and watch very closely the NFP, in my opinion. But my targets for the DXY is still the 97. Okay. So for those who don't know, the DXY, it's pretty the same. It's just the opposite side of the EURUSD. So if I bring up EURUSD here, let's go for a daily time frame. Corrected that. Okay. We can see that a drop on DXY, so from here down to this point, a drop of 6.5% on DXY corresponds to a up move of around 6.5% again. So it's literally it. Okay. Now we have another drop here. So from here, the EURUSD dropped 3.5%, and from the same point, the DXY rose 4%. So it's a very minimal difference. Okay. So if you find out that the US dollar is easier to read, then you can read the US dollar and just do the opposite onto the EURUSD. Now, what I'm expecting for the DXY is that on the 90, it comes down to 97. Okay. So I'm looking to the 97, and that is a difference of around 1%. Okay, let's call 1%. So EURUSD can probably go up 1% as well. And that would be above the all-time highs of this year. So I'm looking, most likely we will have some sort of a push into the EURUSD. Okay, so now just taking this EURUSD chart off, coming back to the 1 hour chart for the DXY, unhiding that. That's it. So yes, as I was saying, my potential target is still, my possible target for the DXY is at 97. Okay, so that's where I'm looking to go at the moment. Do you guys have any questions on that? As I say, it will be a pretty quick webinar today. I just want to make things short and quick. No questions? Sorry. Just GBP CAD. Oh, okay. Yeah, GBP CAD. Oopsie. GBP CAD is quite of an interesting scenario at the moment. Understood. All clear. Okay, that's great. So I think I could cover the topic pretty well. So the GBP CAD, I'm looking to short GBP CAD. It's on a very extreme point of the market. So if we go for like a month time frame, we can see that we are in a consolidation for quite a while. Okay, and we've only breached that consolidation once upward. So that were on 2015-16. Okay, so that's a long time ago. And right now we are on the literally same spot as we were before that break. So we are on an extreme, and most likely what happens on extremes is that the market tends to, reject those extremes as it's doing right now. And I don't see a reason why not look to a short, maybe to, let me just go for 1 hour here. Actually, 4 hours better to look. So let me just double check something. Yeah, why not look into target at 184 maybe? Shorts on 184 would be shorts on targeting 184 could be quite great, into my opinion. Okay, so mainly 184 would be great. So hopefully we can get that down to 184. Yeah, so GBP CAD still pretty bearish in my opinion. Any more? Do you guys have any more other pairs? No? Okay. Well, so EURUSD. Oh, okay. I've talked about EURUSD. I think you were in here. Yeah, I can talk about that. So EURUSD is basically quite simple, actually, to be honest. No, you don't have to be sorry, mate. It's all good. EURUSD is quite simple. I do hold 3 targets, basically. I'm long on EURUSD, as you guys can see. So my main target would be 1.20, and that's where I would be looking to go by year end. Okay. My first target, my imminent target would be at 1.17500. And then after that, 1.18700. Okay. It will all depend on the CPI tonight. If we can get a CPI higher than the previous, most likely the euro will be weak. Okay. So yeah, it's the opposite. If we get a CPI as expected, then we may have a sort of a positive push on the euro side. Okay. So yeah, pretty much long on euro, looking to 1.17500 first target, 1.18700 second target, 1.20 by year end. Okay. All right, that's it then. Thank you so much for coming today, guys. I hope you enjoy. It was a bit of a quicker one, actually. Never done such a short webinar, but I will be back tomorrow and we can have some more trade scenario. And yeah, catch up to you guys tomorrow. Have a great day, and I see you guys tomorrow. Bye bye.